Hello, viewers and subscribers. Welcome to CN Great Cancels and Forex Trades today. Today, we are going to be talking about how to identify the trends of the financial market like a pro, and it's the part 2 video on that topic. But why is it important? Why must we know the trend of the market? Well, just keep watching, and I'll tell you in a moment. Alright guys, welcome back again to CN Great Cancels and Forex Trades, and I am CN Onna in case you are new on this channel. Here we upload useful contents that would help you to be successful not just in the financial market but also in other areas of life. Now let's get into the business of today. And why is it important? Why must we know the trend of the market? Well, it is important that we know and identify the trends in the financial market because you want to be profitable. And for you to be profitable, you must trade with the trends and not against the trends. And don't forget the saying in the financial market that trend is your friend. Indeed, trend is your friend. Secondly, knowing the trends and trading in the direction of the trend maximizes your chances of success or winnings. Also, knowing the trends helps you to avoid false sells or false buy signals. Now, traders and technical analysts can identify the trends using various forms of technical analysis, including both trend lines and some technical indicators. Some of those have their imperfections because they are either lagging or they fail to pick the low points and high points of the market correctly. Okay, in my last video on this topic, well, you can check the description box below to see the link to the part 1 of this video if you have not watched it. But let me quickly give you a recap. In the part 1 of this video, we did talk about the basics, and whatever we're going to talk about in today's video will be hanging on those 4 things we discussed in the first part. Now, we did talk about we did say that for you to identify the trend of the financial market, you definitely need to do the following. Number 1, define your trading time frame. Number 2, you use a proper zoom level. Number 3, you determine the direction and position of the market at that particular point in time. And then fourthly, you take note of the PAP, that is the price action pattern at that particular point in time. Today we are starting off with how to use trend lines to identify the trend of the market. Please, you have to know that I have actually saved the best for the last, and that is DIY, which is why you need to watch this video till the very end if you don't want to miss the very best of it. Now, the most common way of identifying trends is by using trend lines, which connects series of highs and lows of the market. And for an uptrend, if you can spot and connect a series of low points sloping upwards, then you should have an uptrend, because uptrends is often characterized by higher highs and higher lows. In this case, a trader should be looking out for a buy opportunity whenever the market touches and bounces off the trend lines moving upwards. Don't just worry about that, because I'm gonna show you all that on a real chart. But on the other hand, for a downtrend, if you can spot and connect a series of charts, high points sloping downwards, then you should have a downtrend. because a downtrend is always characterized by lower highs and lower lows. And in this case, the trader should be looking out for sell opportunities whenever the market makes a touch on the trend line and bounces off downwards. Now, that's it. So let's get to the trading chart for examples, because the diagrams displayed on the screen is just for simplicity. Trend lines are usually drawn on candlesticks picking at least 2 points of obvious touches on the wicks of the candle in most cases, and for a better result from a higher time frame, and I'll show you in a moment. Okay, now here's what I mean on a real chart. Okay, and we're going to be looking at 3 different indices that we can use as example to what we just discussed. Okay, and this is volatility 100 1S index on 4 hours chart. Okay, so we're going to draw trend lines to demonstrate what we just talked about. Okay, and here we go. Okay, yeah, so we draw a twin line. I'm using mobile phone for flexibility. Okay, using mobile phone for flexibility. Yeah, here we have obvious touches. Okay, now remember this is 4 hours time frame, and if you go to a lower time frame, this small portion we just chose is a very big market. Okay, now you can zoom in to see how it looks. And if need be, that will reposition it. Remember that the trend lines can touch both the wicks and the body of the candlesticks. Okay, you can see obvious touches, and here you see that what we just discussed was actually obeyed here. Now here you see the market made from this long downtrend, you discover that he made a touch. He didn't get to this low point, and then he reversed. He made a touch on this trend line. It bounces off, sloping downwards. So from here to this point, it was downtrend. Okay, and then he made a touch here and bounces off, moving up. Okay, and made a touch here as well. So this place it was respected, and he made a touch down and bounces off. So from here moving up, a trader should be looking for a buy opportunity. And when it made a touch on the upper trend line and bounces up, moving downwards, a trader should be looking for a sell opportunity. Now it was respected here as well. It made a touch here, bounced off, moved upwards again, made a touch here, bounced off, moving downwards. Okay, you can see that it was highly respected until it was broken here. Okay, it was broken here, and please note that respected trend lines can serve as a support or resistance area or level, if you choose to call it so. And don't also forget that the trend lines will not always be respected, because the market is sophisticatedly dynamic, and you don't have to completely rely on trend lines. Okay, in fact, that's why we have breakouts. Okay, that's why we have breakouts. Now if you move to a lower time frame, you discover that this is a very big market. Okay, look at how it was respected. Okay, you made a touch here and moved down, made a touch here, bounced off again, moved up, and it bought for a while, a long time, and all that. So that's just a perfect example on a volatility 100 1x index. Okay, now let's check other markets as well. Okay, here we are looking at boom 1000. Okay, boom 1000 on 1 minute chart. Boom 1000 on 1 minute chart, and we are going to be looking at this very small portion where the market ranged for a while. I'm going to use trend line to make an illustration here. Okay, so we're going to draw a trend line around that area this way. Okay, this way. Okay, and then we draw a twin line this way. Yeah, exactly. Now this is a small portion of a chart, but then if you go down to a lower time frame, this is a big market. But here we discover that after this long downtrend, okay, it got to this point and then it reversed, moving upwards, and then it made a touch here on the upper on the high. This is a high of the market around this area. Then it came down, made a touch, came down, made a touch on the low, went up, then made a touch and came down as well. Like I said, if you move to a lower time frame, this is a very big market. This is 15 minutes time frame. Look at it, just take a look at it, guys. Okay, so that's it. I think we can make do with this, and let's quickly go to another point, another way of identifying the trend of a market. But don't forget that respected trend lines can as well serve as a support or resistance level, and trend lines may not always be obeyed because the market, of course, cannot continue to revolve around or within a trend line. Okay, it must break it, or it must break it upwards or downwards. Okay, that's why we have breakouts. So that's it for trend lines, guys. Okay, so guys, we're going to clear off the chart. We need to have a plain chart, but then the next way, or the next thing we're going to talk about is the use of moving averages to identify trends. Okay, and in this case we are talking about simple moving averages, and the moving averages in their numbers are very powerful, and one of the most important indicators in Forex generally, and specifically in synthetic trading. And they are useful in guiding traders and having an idea about the potential direction of the market. Here we want to talk about one of the most important moving averages used by traders to identify trends, and that is the moving average period 200. Okay, and we're using simple moving average period 200. This moving average serves as dynamic support and resistance to many traders, and it is generally or ideally believed that whenever the market is above the EMA, that is above the SMA or EMA, whichever one you use, that the market is in an uptrend, and at the same time in a safe zone for buys. On the other hand, if the market is below the moving average, it is on a downtrend, and as such it is safe for sales. However, this is not always true, and this only happens in an ideal situation, and because of the way the market is designed, we may not always have an ideal situation in the market, in the financial market. Hence, the moving average period 200 is not completely perfect. Okay, as you can see, let's just put it in. Okay, let's add it to our chart by clicking the F icon. Then you're going to moving average, and we're going to choose the period. So be 200, shift 0, method is simple, and then you apply it to close. Let's choose the color, the pixel 3, and then the color blue. Okay, and then you're done. Okay, now this is the moving average, simple moving average. Okay, simple moving average. Remember, I did say that ideally it is believed that whenever the market, this is boom 1000, whenever the market is below the moving average, this simple moving average period 200, that it is in a downtrend, and then it's safe to sell. Okay, but whenever the market or the action of the market is above that, it is in an uptrend and it's safe to buy. Okay, now this is what it means. Okay, now this is 1000 on 15 minutes chart. See, the market is above the moving average, and you can see series of spikes. Okay, series of green candles. Okay, that is spikes. Okay, and here it is below, and you can see more of red candles indicating sales. Okay, now let's go to a higher time frame. The same thing. Now let's zoom in, but you notice that this is not always obeyed. Okay, it's not always obeyed, but is a very important indicator in determining the trend of the market. Okay, so and what do you see, what do you notice here? I want you to tell me in the comment section below what you notice here whenever the market is above the simple moving average and whenever it is below. So with this knowledge, a trader should be able to know when he or she is in a safe zone to sell or buy. Remember, when the market action is below the moving average, it is believed that you are in a safe zone to sell. And whenever the action of the market is above, it is believed that you are in a safe zone to buy. Okay, depending on what you want to do, whether you want to buy or sell. Okay, that's just that. And this is also very imperfect. Okay, as it is not always obeyed, and we don't have ideal market situation, which is why we have the next thing we're going to talk about. Okay, the next thing we're going to talk about. The next method we are going to talk about is the use of the Williams fractals. Okay, to identify the trend of the market. The use of the Williams fractals. I made a video on how to use the fractals only to scalp. Okay, you can check it out. I will also put it in the description box for you to watch that video. The fractals is another powerful analytical indicator that basically picks out the swings for you. That is the high of a swing and the bottom or low of a swing. This is particularly useful in identifying the swing points in the market, and this helps you also to start spotting when the market is moving into a potential trend. Now let's just add it to our chart. Let's just add the fractals to our chart and see how it looks like. Okay, let's click the F icon and then you scroll down to B Williams where you have your fractals. Okay, you can choose I'm choosing 3 pixel and the color is purple. Okay, let's see how it looks like. Then you click done. Okay, now remember I said the fractal basically picks the low points and high points. Okay, this is boom 1000. Okay, now you remember the boom 1000, this was where we drew our trend line. Okay, and then okay, let me just put the trend line again so that you have a better understanding of how it picks the low points and high points. Okay, remember that it made touches here. Okay, remember that our trend line was here as well. Okay, now hope you can see it picked the high point here and also picked the low point here. It picked the high point and picked the low point. It picked the high point and picked the low point, just like that. Okay, so with this you can have a clear idea about how the market or where the market will proceed and continue. Okay, it gives you an ideal direction. Okay, and personally I hardly trade without fractals on my chart. This is because I use it to know when a price is rejected at a particular point when it is introduced on the candlestick, and to have an idea of the possible direction in which price will develop and proceed. But like other methods, it's not still perfect. Sometimes it doesn't pick the swings perfectly, and that's how the financial market is designed to be very dynamic, which is why we have our last and very important way of identifying the trend, and that is the DIY. Please, if you have watched to this point and you've not subscribed to this channel, please, I beg of you, do subscribe to this channel and hit the notification button so that when I upload a new video you will be the first to watch it. Okay, also smash the like button there, and let's keep going. Okay, now the fractal. Before we go to the DIY, let's check lower time frames. Whenever price is rejected at a particular level, the fractal is introduced. Look at here, price was rejected here, fractal was introduced, signifying a reversal, and then it moved downwards. With the trend line, you can actually combine different indicators to help you identify the trend. Okay, now this is a trend line, and then the market made a touch here, and you might be wondering if it's gonna reverse, and you may not be sure of that. But the fractal, with the introduction of this fractal, you have assurance that the market is definitely gonna reverse, and that's why you have this movement of a sell down to this point. Okay, now when it spiked here, fractal was also introduced, though a short reversal, but remember this is 15 minutes time frame, and this candlestick is 1 2 3 4 5 6. This is obviously 1 hour 30 minutes trade. So if the market was rejected around here, and you could take 30 minutes trade from that up down to this place, that's a huge amount of money depending on your account size and your lot size. Okay, so remember that, like I said, it's not also perfect. Okay, and that's why we have our last point. But then let's clear off the chart, let's make it plain. Okay, let's make it plain, and let's get back to the chart. Also let's remove the fractals as well. Okay, that's it, we have a clean chart right here. All right guys, we now have a very clear chart, and I want to congratulate you having watched this video to this very extent. And if you have not subscribed to this channel, kindly do so now by hitting that subscribe button down below and turn on the notification as well. That way, whenever I upload a new video, you'll be notified. Also, do give this video a thumbs up like if you have found value in it. And let's get into the last way that we have today, and that is the DIY, do it yourself. And having seen that none of those ways we have discussed that you can use to identify the trend of the market is 100% perfect, what do you do then? It's simple, do it yourself. You see, the market is full of high level of dynamism, and that's why a support zone can become a resistance zone can become a support zone, trend line can be broken, and an expected reversal may continue pushing forward, and at the same time an expected forward movement can reverse all of a sudden. Because of this, you must have to follow the market and what it does. Do it yourself. You know what you want from the market, which is either to sell or to buy. Okay, and you have to look at the market, study the behavior of the market, and possibly devise a way, a personal means of following the market dynamism and how to identify a potential trend your own way. That's a simple way to grow. Okay, personally, I have several ways of identifying the trend of the market, either long term or short term, and if the conditions are met, depending on the time frame, it also helps me to know how long to stay in the market if I am scalping on a lower time frame. Like I said, I have many ways, but let me quickly share with you one of those ways before we say goodbye for today. Recently, I discovered a very simple yet smart way of knowing whether the market is in a downtrend or will go downtrend or uptrend. I basically use two moving averages, and that is moving average, simple moving average period 2 and simple moving average period 7. Let's quickly add it to the chart so that we'll see how it looks. Okay, then yeah, this is the parameter for the period 7 moving average. The period is 7, shift 0, middle simple, apply to close, and then the style 3 pixels. We're using the color red. You can use any color of your choice, and then you click done. Okay, and let's add the second moving average, which is simple moving average. The period is 2, shift 0, metal simple, apply to close. Let's choose a different color for it, say light green. Okay, this is what it looks like. Okay, now basically when you look at the market makes M's and W's. Okay, so you are going to be focusing on the second legs of the M's and W's. M's in the case of boom market, and W's in the case of crash market, depending on whether you want to sell or buy. Okay, now if you take a critical look on the chart, okay, remember or take note that the higher the time frame, the longer the trend. That is to say, if the conditions are met on a higher time frame, the trend is most likely to go stronger. Okay, and if you look at this chart, this is boom market on 15 minutes chart. Okay, now you will see that the green moving average period 2, whenever it crosses the red moving average downwards, okay, you will see or you will have a downtrend. Okay, don't forget that I said the higher the time frame, the longer the trend will go. Okay, now it crossed it here downwards. It crossed the green moving average, cross the red moving average downwards, and then you have this down movement, this bearish movement up to this point. Now the trend will never stop until you have the green moving average crossing the red moving average from below again upward. That's when you have a reversal. Okay, and whenever it crosses the red down again, you have the bearish movement here. Okay, now let's quickly see the opposite side. Now look at this place. Okay, here you have the green moving average crossing the red moving average from below, moving upwards, and that's why you have this upward movement, bullish movement up to this point. You notice that there was only a reversal at this point when the green moving average cuts the red moving average downwards again. Okay, that's just very simple and smart. This can be seen in all the time frames. Okay, be it M1, M5, M15, H1 and all that. So let's quickly check another market index before we say goodbye. This is a crash 500. Okay, now crash 500, the same thing, very beautiful. Look at it here. The condition was met here. You see the green moving average crossing the red downwards, and then you have this crash to this point. Now you see the same thing happening here again. The green moving average crossing the red moving average from down, moving up, and then you have this bullish movement. Now this same condition was met yesterday on crash 5-1, the same crash 500 on 1 hour time frame, and then it crashed long term, okay, for almost a whole day. The condition was met here, and then you can see the crash up to this point. Okay, now the condition is also about to be met somewhere here, and then we're gonna have bullish movement almost throughout today. Okay, so that's basically it, and there are many ways, simple ways you can use to identify the trend of the market in order for you to keep making good profits in the financial market. Okay, and guys, that's basically all for today's video, and I'd like to say many thanks for watching and making it to this very point. Okay, but before I will say goodbye for today, I'd like to inform you that the CNG 2-in-1 life changer strategy will be released after Easter celebration, free of charge, as my way of saying thank you to my lovely viewers and subscribers. And the strategy wasn't actually completely free, and those who got it at a cost, they are still testifying about the profitability of that strategy, and I want you guys to have the same testimony, which is why I'm going to release that strategy free of charge. Meanwhile, if you have not subscribed to this channel, I'd like you to do so right now and turn on the notification. That way, whenever I upload a new video, you'll be the first to watch it. Please subscribe. It doesn't take you anything extra to subscribe. It's just a way of encouraging us so that we'll keep providing free and profitable strategy for you. And with that being said, I'd like to say once again many thanks for watching. Please explore the videos on this channel and leave your comments in the comment section below on the kind of video you want us to do and how we can be of good help in helping you to make good profits from the financial market. This is CN Great Councils signing out.